As a shock to some, home prices are still on the rise here in the greater Boise, Idaho area, better known as the Treasure Valley. Doom and gloom, doom and gloom, and doom and gloom is really kind of coming around the United States. Will that impact real estate across the U.S. in the months to come? But as for now, what is the data showing and why is real estate continuing to be on the way up right here? And what is the inventory looking like to be able to create that kind of a situation? So please stick around for this video. We're going to go ahead and dive into all this information and more in Mikey's monthly market updates. I look forward to being your guide. Well, welcome back after that quick break, everybody. Of course, my name is Mike Petras with MPRE Residential, powered by NextHome Treasure Valley. And again, welcome to another episode of Mikey's monthly market updates. For all you that are new to this channel, this is going to go ahead and break down what is happening in real estate right here in the Treasure Valley or the greater Boise, Idaho area. We will also get into some big elephants that might be arising here in the US that can cause complications in real estate. And at the end of this video, we're going to go ahead and discuss the best strategies if you're looking to buy, sell, invest, or you're even renting right here in the Treasure Valley to get you to home ownership or get you to the investment that you're looking for. So if you have any further questions or you are looking to make that leap right here to this area, please feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to discuss these possibilities with you and get you on the right track to home ownership or be able to sell your house for the most money in the quickest amount of time possible. But before we move any further, please click that subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with. Please feel free to share this information with anybody that you know that might be looking to make a move to this area. And of course, please give me a thumbs up if you do like this content. It does help out the algorithm, helps to push this content out there to the YouTube world, and I'd really appreciate that. So anyways, let's go ahead, let's start diving in. Let's see what happened in Ada County for April of 2024. Then we'll dive into Canyon County like normal. Let's get to it. All right, Ada County, here we go. And looking at this data, we could see that the median home sold price came down just a little bit from last month, but nothing really kind of that significant. In fact, since the beginning of 2024, home prices have been on the rise. We are sitting at $552,900 for this month. That if we look all the way back to say the 540 that we had in 2022, we're up 2.33% overall since then. But of course, down from the market correction that you see there at the 602,250 when that hit late May, early June of 2022, all the way down, which is still down 8.19% since then. But just over the years, and especially since 2023, when we really kind of staved out of the market correction, we have been slowly chipping away at that number. And in fact, actually over this year, relatively quickly, looking at that 487, 495, all the way to what we're at today, bam, since 2023, up 11.82%. So boom, it's still up, regardless of all the whatever you hear, out there is happening around the US. It still hasn't affected the real estate markets as of yet, but we'll get to that again later on in this video and other videos to follow. But looking at the 6-month breakdown, as I mentioned from the previous month, when we're sitting at 555, we're down roughly about 20 some odd $100 there. So really down about 0.37%, not much of a change from the year prior. But now, if we take a look at the 514,975 that we had at the beginning of this year to where we're at now, we're up a whopping 6.85% since then. So the Treasure Valley markets are doing good, especially in Ada County. Now, why is that? Well, really, the answer to that is the buyer's demand. I know you're probably saying, wow, I mean, how could that even be possible considering where mortgage interest rates are, where the cost of living is, where wages are, and overall affordability of a home? Well, it is. Let's go ahead and take a look at this graph. As we can see, we got 1,565 homes available for purchase today, but 801 is sold. And if we're taking a look at the pending line and actually the sold line, so in the orange and the gray, it has been on the way up. But we are seeing that tick now in the pending line. So what can we expect for that? Well, if we go ahead and we take a look back at when the market correction happened, we could see that the orange line has gone down late May, early June. Same with the sales, and inventory started shooting up. Are we going to see that return to where the pending line is going to start ticking down and sales will go the other direction while inventory creeps up? Well, unfortunately, the data is just too new to be able to tell. Need to see another month in order to be able to say, hey, might be able to expect median home sold prices to come on down. But what we've got is more or less a stabilization pattern that we've seen all the way back in 2019, before the pandemic hit, before the after effects of the market correction hit. All of this kind of came into itself and had the swings. We're still seeing kind of signs of stability there. And again, seeing the signs that the buyer's demand really hasn't gone anywhere, considering where the mortgage interest rates are at and the overall cost of living. Amazing. So what I kind of attribute that to is that still this is an area that's very, very popular for people in blue states to move to. Idaho is the least regulated state in the union, period. End of story. So people that are just sick and tired of California, sick and tired of Oregon, Washington, they're moving over here. They're not bringing their politics with them. We can go ahead and get into that argument if you wish to. Leave a comment down below. We'll get into that. But Texas is also moving in droves. Maine, people from New York, but other red states too. It's amazing the migration that's coming here. But so far, our inventory is still not skyrocketed out of control. Is it heading in the direction to where it is increasing? And you can see the buyer's demand maybe ticking the other direction. It is. So we'll just have to continue to see what happens next month. Well, let's move on. Let's take a look existing and new construction inventory and see what's going on there. So the graph previous, of course, was total single family homes, and that is broken down between what is existing out there in the market and what new construction has available. And getting back to the months worth of inventory that we have in total single family homes, we're sitting at 1.95 months worth of inventory, which is up just a tick from what we had the previous month in March. But as we can see by this graph, existing homes, boink, inventory has definitely shot up. And let's look at the orange line. Orange line, doink, pendings starting to tip the other direction. Okay, and when inventory gaps itself from the available buyers out there, then possibly we can expect some prices to come down here. But again, this is 1 month worth of it. I'd like to see another month before I say, hey, buyers, hold on. We might be able to see some prices maybe tip down here as there's more inventory than there is competition out there in terms of the buyers. But as we sit right now, we're sitting at 1.64 months worth of inventory in existing homes, which is up from last month. But look at the actual solds. The sold just boom up with the pendings. And again, not separating itself like we see back in late May, early June, when the market correction took hold in 2022, when that really gapped itself. Sellers or buyers went boom. Sellers had their inventory out there and they had to drop their prices in order to be able to be competitive with other homes out there in the market. So we're still kind of looking like what we saw in 2019, but let's look at a few more months as we go down the line for me to be able to fully say, hey, might want to hold on here. We might see some dips in home prices, but for right now, it's just not there in Ada County. How about new construction inventory? Well, that's kind of a different story. But again, remember that builders can control their inventory. They can. They will build according to who's really kind of coming through the door right now. A lot of them retreated back to pre-solds, and that's really kind of showing. But there are still available homes out here that are being built in spec. And what spec means is just that they're going to go ahead and throw it up. What you see is what you get. One of the famous builders for that is Corey Barton Homes, or CBH. They definitely build that way. But there are other builders out there, like say Hubble, Toll Brothers, and many, many others that will allow you to go in there and make your options according to the studio to be able to build what you want, and you buy a pre-existing lot before they start to build. So that is the definition between pre-sold and a spec home, just so that you know. Well, let's take a look at this inventory. As you can see, it's kind of flatlined itself really over 2024. So again, builders are kind of controlling their inventory. They don't want to keep slipping in price, and they have been. In fact, actually, as we see the data coming up here real soon, we can tell that new construction has taken the biggest hits in both Ada County, and Canyon County here in the Treasure Valley. But as we can see, we got 646 homes available in new construction. 243 of those have sold. And we can see that pending line is still on the way up. Now, again, the pending line is also affected by, people that are still under contract. They're waiting for their house to be built. But either way, we see that commingling. And as long as we see that commingling and not a gap like we saw back in late May, early June 2022, when the market correction hit, well, you see how that line went down. We're just not seeing that pattern. So do I anticipate new construction homes to really kind of fluctuate in price as maybe compared to existing homes? No, I really don't. But let's go ahead and let's take a look at those numbers and see what happened. And looking at existing homes, if we're looking at just an overall breakdown, we can see that we had no change from last month. We still stayed at $540,000 per the median home sold price here in Ada County. But as we can see, we've just been on the rise. Looking all the way back to 2022 when it's sitting at 515. We are up 4.61% since then, but still down from the market correction when it's sitting at 586,750 to the 540 that we've got today. So down 7.96%. But at the end of the market correction, which is really about January of 2023, which when we're sitting at 475 to what we are today, we have chipped away 12% of that. Boom. And if we're looking comparatively between what has happened since 2024 of January of this year, we're up 7.68%. So existing homes have shot up in price. But we got to take a look at that inventory. Remember again how the pending line was going doink the other direction. We got to see whether or not it's going to start creating a gap. And that's not going to really be able to show itself until I at least get one more month worth of data. So please hit that subscribe button, hit the notification bell so that you're constantly in tune with these videos when they do come up and you know what's going to happen next month. I'll be able to give you some maybe warning signs of saying, hey, might want to hold off a minute. Let's see what's happening in existing homes. What about new construction? New construction in Ada County, again, has gone the opposite direction. And again, why? Because the builders can really kind of control their inventory. I don't know how many times I need to say that. If you want to go ahead and call me for more information on that, feel free to do so. Shoot me a text, send me an email, or even comment below. More than happy to go through that details with you. But as we can see, we made another significant jump up from what we had at the 569,850 from last month, sitting at the 583,995 in the median home sold price in new construction. From last month alone, we're up 2.42% since then. That's a pretty whopping increase overall. And if we're looking at from what we have, the 588,945 back in 2022, really before a lot of this mess kind of started in itself, we can see we've almost chipped away to that baseline. We from 2022 just down 0.84%. And if you continually watch these videos, you'll notice that that has been chipping away. Of course, still way off from the 690 that we had when the market correction really kind of started, down still 15.36% since then. So again, new home construction has taken more of the hits overall and hasn't had as much of a recovery as compared to then. But looking at the 494,900 at the beginning of 2023, when the market correction really kind of ended to what we've got today, again, up 15.25%. So it is chipped away significantly. And looking at 2024, from when that started to what we've got today, we are up 9.24%. So new construction has definitely made some rebounds when it comes to existing homes in terms of their overall equity gain. Now, of course, I do want to say again, this is on a county level as a general. Of course, real estate is a little bit more on the localized aspect, or not little, it is localized on the local aspect. So if you really want to know your home value, please feel free to give me a call. More than happy to discuss that with you, run a CMA for you, especially if you're thinking about selling your home. We'll get to that a little bit later on in the video. Well, let's go ahead, let's roll through and see how the health of this market is doing. And one of the two slides that's definitely going to show that, first off, is days on market. So days on market, how long on average is a house sitting for out in the open market? And we see it made a little bit of a tick up from last month. We're sitting at 37 days. But of course, the seasonal swing is here. This is when buyers are coming out. This just always happens during real estate. And we can see that the days on market has come down as more buyers have come into our markets. But it's really kind of leveled itself out. If we look all the way back when the pandemic hit, we had no inventory whatsoever. The days on market just flew by. I mean, we got down to 10. And then the market correction hit. When everything slowed down, buyers were out, sellers were there. Sellers had the hardest time dumping their houses because they had to drop their prices to be competitive to the rest of the inventory that was out there. Look, shot up to 74 days. But let's take a look at where we're at now as compared to where we were back in 2019, before all the mess started with the pandemic. We're kind of basically back on par. So, has the Treasure Valley kind of returned to a normalcy? Well, according to the data, it looks like it has. But what about the cancels and expireds, which is the other determination of health? Well, we can see here that the cancels have come up. Now, why have the cancels maybe come up? Well, maybe some things did kind of fall out of contract, maybe because interest rates got a little bit too high for the buyers. They kind of fell out of contract, that aspect. Or maybe the sellers were out there saying, hey, I want to make a lateral move. Oh, but man, these interest rates are murdering me. Well, the interest rates did go up. They are coming back down. And as we know, inflation is really kind of being sticky right now. Are we going to see stagflation or even possible hyperinflation? Well, stick around to some videos to come. We'll discuss that in detail. But either way, I just want to show that the cancels are definitely on the way up. So there are some things kind of falling out as it comes around, which is kind of showing maybe a little instability to the markets overall, possibly due and most likely due to mortgage interest rates. But if we're looking at the expireds, again, that has ticked up a little bit, and more or less because you still got sellers out there that just, don't want to come off their price, don't want to be kind of competitive in that aspect. So sellers, if you are there and you want to sell your house or you need to sell your home in order to be able to move, again, sellers is still, in my opinion, a time of necessity that you're probably trying to move, because why you're going to get rid of your 3-4% or even high 2% mortgage interest rate. But if you are looking to sell, you are making that lateral move, you do have to be competitive now that inventory is on the way up with other people out there. But overall, according to the cancels and expireds, we're not looking too shabby. So let's go ahead, let's break into Canyon County. Let's see what happened there. So Canyon County, your turn. Boink, we're down a little bit from last month of what we had, sitting at $419,990, as you can see via the graph in the median home sold price. But as we can see from 2024, it has been on the rise, and I'll get to that statistic here in a minute. We are still under the threshold, though, from 2022 when we're sitting at $424,900, so down 1.15% since then. And of course, since the market correction hit late May, early June, sitting at the highest at $476,500, still down 11.85% since then. But looking at 2023, when the market correction really kind of stopped, we are up 5.84% since then, when we're sitting at $395,445. But according to 2024 statistics, when we jumped up, we are up 4.76%. So overall, on a county level, the homes out in Canyon County have appreciated overall here in the Treasure Valley. So buyers, keep that in mind, regardless of where mortgage interest rates are at. We'll get to inventory. We'll see how that's going to be looking, just like we did with Ada. But according to the 6-month breakdown, you can see it. We came out of our holiday lull, which we always get in real estate, where prices kind of come down a bit before the holiday swing gets out into the hot time, which we're technically in right now. But as you can see, that $399,990 that we had back in January of this year to the $419, again, putting it there, that we rose 4.76% since then. But we did take a $10,000 hit from last month, which just means that we're down 2.32% since then. Let's look at inventory. Let's see what's maybe in store here. Like Ada County, the inventory, again, is on the way up. But what about the pending line? What about the overall sales, the buyer's demand that's out there? Is it ticking the other direction, like Ada County, to really kind of show me that, hey, maybe I ought to pay attention to another month and see if there's possibly going to be some flex in home price? Well, not really. It's still shooting on the way up. We can see that orange line, but also is the overall inventory sitting at 1031 with 429 actually selling. Has it gotten up to that level to where we can actually see the pending line coming down and still see the inventory shooting up like we saw late May, early June, which resulted in the market correction? No, it's not there yet. It's still kind of looking like a 2019, maybe gapping itself a little bit. But overall, Canyon County, I think, is probably not going to see any kind of a term of market correction as of yet. But we'll just go ahead and continue to watch that data and see if the buyers continue to dump out. Of course, during election years, I want to bring this up too. During election years, buyers technically taper off, as do sellers. So keep that in mind as we take a look at this data. But overall, we're sitting at 2.4 months worth of inventory in Canyon County, which is up from last month. And yeah, overall, pound for pound, there's a little bit more inventory available in Canyon County if you're kind of doing the ratios as compared to Ada County. What's adding to the inventory, you might ask? Is it existing homes or is it new construction? Well, let's take a look at the existing homes, and we could see, boom, it really jumped up. Wham! Okay, so we're sitting at 550 homes available to where only 262 sold last month. So that's leaving us at 2.09 months worth of inventory in existing homes, which is obviously up from last month. And now look at the pending line. Let's take a look at this. The pending line has gone the other direction. Okay, so I think that buyers out there, and especially when we get to new construction inventory, buyers are looking more in the new construction aspect than maybe they are existing homes. So we're seeing the pending line kind of tip the other direction, and we're seeing inventory skyrocket. Could we see a correction or prices start dipping down in existing homes in Canyon County? That is likely, like it is in Ada County. But again, I would like to see another month to see the pending line maybe continue to go the other direction and inventory shoot that way up. And if that is the case, next month I will put on the brakes to you and say, hold on a minute. You might want to wait a little bit if you're looking at existing homes to see if you got more negotiation power, or to see if the sellers end up dropping their prices a bit. But stay tuned, hit the subscribe button, hit the notification bell so that you can see that video when it comes up next month. Let's go ahead and take a look at new construction though. How about new construction? Again, just like with Ada County, they can control their own inventory. If you want to go back, learn about pre-solds, and you want to learn about spec homes available, go ahead and check that out in Ada County. You'll go ahead and see that as I mark it in this video. But as we can see, the inventory really kind of hasn't gotten out of the whack. We're sitting at 481 homes available for purchase out there, 167 sold, and we can see that pending line is still kind of ticking on the way up. Now, of course, as I mentioned too, the pending line does include homes that are still being built. So keep that in mind as we go along, but we're still kind of intermingling itself like we saw in 2019, not the absolute kind of dip in inventory rise that we saw that was going on during the market correction. So do I see prices really kind of coming down in new construction overall in Canyon County? No, I think the builders really kind of got a handle on that. But let's go ahead and take a look at the median home sold prices in both categories and see what the difference is. Starting off with the median home sold price in existing homes, we can see it just ticked up $1,000. So really since last month, we're just up 0.25%. But overall, we have been seeing those gains and now have surpassed the 2022 of 390 that we had in 2022. So up $11,000 from them. So if we're looking at that, we're up 2.74%, but still down from the market correction, but still chipping away. When the market correction at the top of the market was at 425 down to the 401, still down 5.64% since then. But a massive gain since really the market correction ended in January of 2023. It's sitting at 339 to what we've got today. We're up 15.64% in that category. Damn, wow, what a huge one. And if we're looking back at 2024, compared to what we've got to today since January of that time, we're up 4%. So again, median home sold prices have been on the way back up in Canyon County in existing homes, regardless of where mortgage interest rates are at. How about new construction? Well, new construction, as we can see, took a bit of a hit, sitting at $434,990, down for the $445,990. So down basically $11,000 since the month prior, which puts us at 2.46% down since then. But again, shipping its way back up since 2023 when it's sitting at $405,859 to what we've got today, which is up 6.7%, but still massively down from what we had in the market correction, down 20.76% since it was sitting at $549 down to what we got today. And still haven't caught up to that threshold that we had in 2022, still down 6.45%. But again, it's chipping away itself. And as long as they can manage and control their inventory, you can anticipate the median home sold price to continue to be on the way up. But overall, you do have a better value if you're going towards new construction. And new construction is still offering concessions. Most of the builders are going towards whatever you choose with most builders. From closing costs to buying down your mortgage interest rate, etc. So basically kind of free money aspect. If you've got more questions on that, feel free to reach out to me. More than happy to go through that with you and talk about the best strategies in order to win in a new construction setting. But let's take a look at the health of the market and see what's going on in Canyon County. Canyon County, unlike Ada County, it's dipping still in the days on market, which is showing that, of course, buyers are still out here. Buyers are here, people, regardless of where mortgage interest rates are at. We're actually sitting at 40 days down from the 46 that we had in the month of March. So if the activity is picking itself up, which is typical for this period when the hot season's here, people are coming out and buying. And it's more or less, again, on pace to what we saw in 2019 before really the pandemic hit itself to where we got down to 13 days. There's no inventory out there. There's a lot of buyer's demand. And then again, the market correction, when that completely flip-flopped and found itself at 83 days at its maximum, is like, wow. So we've really kind of filtered out, at least in my opinion for now, the swings that the pandemic has created, gotten more back on a stability aspect of what should be a normal market here in the Treasure Valley. But when we get to the big elephant section, I'm going to go ahead and talk about what could be coming up. And of course, videos to follow is really going to kind of follow that of what could possibly affect real estate coming up here. So please continue to pay attention to this video. And let's go ahead and cover the last one, which is going to be cancels and expireds. And like Ada County, again, the cancels are on the way back up. maybe because some contracts are falling out because of where the mortgage interest rate is at for some buyers, but also maybe some sellers are getting cold feet because, again, we know that mortgage interest rates spiked. So we anticipate really the cancels to kind of come up. Expires actually went down, so maybe there's still some sellers out there that want to compete and be able to make that lateral move to where they go. But overall, what the data is showing in terms of the health market here of Canyon County is that it's doing okay. Okay, and it's maybe doesn't have so much variables of showing that market corrections can continue, maybe except for existing homes here. But we'll just have to continue to watch that data. Subscribe, hit the notification bell so that you're in tune with the next video. Maybe I'll put the brakes on to you if you're looking to buy an existing home. Say, hold on a minute. Maybe prices might come down automatically because of the competition aspect. So let's go ahead. Let's dive into the big elephant. But before we do dive in the big elephant, Canyon County overall is cheaper in its median home sold price, as you can see, compared to Ada County. But there are benefits to being in Ada County when it comes to the overall county equity level as compared to what you see in Canyon County. So if you do have some further questions on that, give me a call, shoot me a text, send me an email. More than happy to discuss that with you. Look forward to hearing from you. Okay, big elephant section. Well, I'm not really going to kind of dive into too much because the reason being is I'm going to come up with a video kind of explaining what I'm seeing here. But what you should really be looking at, of course, is the debt level that we're in. Okay, both credit cards, national debt, our national interest debt payments that have just absolutely been on the rise. Could be possibly eclipsing Social Security popping up. That's interesting. The gold markets shot up. Okay, and when gold shoots up, we know that our dollar still isn't doing very good. Inflation still hasn't been tamed. In fact, we're getting to a point of stagflation. And in fact, some of the variables are still coming off the chopping block. Like, for example, in the overall CPI report, they got rid of coffee. Well, I mean, we got rid of food and energy anyway, but they're starting to detract in order to show these. There's definitely manipulation happening in the CPI and PCE reports, which are controlled and reported by the federal government. Oh, man. We know that employment is really not where they're saying it's at, but we'll go ahead and we'll get to that too. And then, I hate to say it, we're on the brink possibly of World War III. We're definitely pushing that direction. And what about even civil war here at home? The lines are definitely being crossed, but this is just too much to cover in the big elephant section. So please stick around for a video that I will be coming out with next week, diving into this information. And will there be light at the end of the tunnel, even if things kind of start crumbling down? Believe it or not, there is. So you're going to definitely want to pay attention to that video, hit the subscribe button, hit the notification bell so that you're in tune with the videos that I do come up with, and that you can see what I think could possibly be happening coming up in real estate. But in this point, let's go ahead and let's get to the best strategies if you're looking to buy, sell, invest, or even renting right here in the Treasure Valley to be able to go ahead and get right here. So let's dive into that. All right, buyers, of course, the million-dollar question, is this a good time to buy? Of course, with mortgage interest rates that are elevated, they still are. They haven't really kind of broken the 7% threshold yet. Maybe hopefully they're at it. Stagflation looming. Possible the effects of the recession coming out of the woodworks. This is all things to possibly think about, in terms of whether or not you're in the position to buy. Of course, where the mortgage interest rates are, we know that just kind of compounds to where home prices are too right now. And of course, even with the recession, though, you got to think about, you may not be the one that's going to potentially lose your job, but are quality jobs on the way down as to where secondary, tertiary jobs are on the way up? That is a reality. So we do know that there has been some number manipulation that's been going on with the BLS and the BAA, or the Bureau of Labor Statistics, the Bureau of Economic Analysis, which is really kind of feeding, what the Fed makes their decisions on. And of course, the Fed is playing that nice, good little dance between what Congress is doing and what they're supposed to be doing, because they can't really necessarily tilt us in a recession, or they don't want to. The politicians will lose votes, et cetera, et cetera. Stick around for the big elephant video that I'm going to have coming up. Hit the subscribe button, hit the notification bell so that when I do come out with that, you'll know what's going on. But in terms, if you find yourself in the position to be out there buying and you got the stability to be able to do so, then is this a good time to buy? Couldn't be any worse. I mean, really, historically, the mortgage interest rates are about, well, where they have been, around 7-8%, if we're really tracking it over historical amounts. Of course, we know back in the 80s, got up to 18% at one point. Now, I know the home values are definitely different, but also the wages have offset themselves. Have the wages really kind of caught up to where things are today? Perhaps not necessarily, hence why the mortgage interest rates are really kind of breaking out some buyers from being able to get in this market. But if you do, eventually inflation is probably going to be tackled in itself. Really, the only things that could put us to where we're in danger of inflation getting out of control again is World War III, Civil War, possible of that, BRICS nations taking over our status as a world reserve currency, which would be all sorts of pandemonium. There's different things. So again, stick around for the big elephant section. But even if things all kind of come crumbling down, the banks this time are not going to get a bailout. Bail-ins are a whole other thing to talk about. Not going to get a bailout like before, so they'll probably be forced to come and renegotiate with you, meaning that even if your home value takes a tank, you'll go off of a new appraised value, and then they'll renegotiate the mortgage interest rate with you. Banks can't afford this time around to be able to be bailed out and say, oh, we're still going to stick you to what's going on. So there is some light at the end of the tunnel. Again, things will come out in the big elephant section. But if you find yourself with the means and say the Fed and Congress are able to kick that can down the road again, because for example, if you are looking at like say our national debt interest payments and what compared to tax receipts, what they're actually taking in, is it as high really to put us in danger? Well, about 20 some odd years ago is much, much higher than where we're at now, but it is on an interesting trajectory and something that Americans should pay attention to. So there are a lot of threats out there as it kind of comes along. But if you find yourself in that aspect and the Fed is able to kick the can down the road again with Congress, eventually the inflation is going to come down to the 2% target, or the Fed is just going to basically kind of give up on their goal, which is usually what happens. And keep in mind, this goal is brand new. 2%? That's a New Zealand aspect, okay? And they have to start kicking this in if it gets to 2%. They're totally different. This is a whole made up thing. So there has to be some flexibility that's going to come up here. And when the Fed actually decides to make their rate cuts, you can expect mortgage interest rates to dip with that. And you can go ahead and refinance your rate. It's saying marry the house, date the rate. You might be saying that. Some people might argue that. But in that aspect, it's kind of the truth. And as we can see right now, home prices are still on the way up in both Ada and Canyon County. Are some of the graphs right now showing that it might head the other direction to where we could see some price dips, especially during the hot season here? It can. So if you are looking to buy, click that subscribe button, hit the notification bell, stay tuned, because next month, I really want to see what's going on with those pending lines. Because if a gap is coming, I might tell you to put on the brakes here for a minute and see if the median home sold price starts coming down, or if you got some more negotiation power against the seller coming up. So stick around. That would probably be the one biggest piece of advice and strategy I can give to you right now if you're on the fence of buying. Okay, is consider maybe what's going on here in the US, but also consider what is going on in this data. Leave it up to me to let you know. So we'll see what's going on for next month. But if you do decide buy right now, the inventory is showing itself that you can get away, with asking for concessions. You got that strength, that power. Maybe negotiations on being able to maybe hustle down the price, asking for closing costs, etc. It's there. It's kind of an even playing field between buyers and sellers right now. The sellers are starting again to lose their edge they had, say, like over the last 7, maybe 8 months. So you're kind of getting that there. So buyers, if you are in the market right now, might be a good time for you. And then again, you will go through that pain. You will absolutely go through that pain of the mortgage interest rate. Will that change? It can. Are we possibly facing stagflation? Possibly there. So it could stay a little bit higher than usual. But there's other things that you could do. Like you could talk to your lender about what's known as a 2-1 buy down. Because I don't anticipate this lasting forever, okay, in that aspect. Maybe a couple of years. I don't have a crystal ball, but I'm guessing maybe a couple of years. If you're not aware of the 2-1 buy down, click on the link at the end of this video. So that way you can get in tune with what a 2-1 buy down is really all about. But in a nutshell, you're buying down 2%, for 1 year, and then the next year you're at 1% before you get to the baseline. So there are ways, and if you can pick up closing costs, from a builder, or you can get concessions from a builder, or even an existing home, you can go ahead and use that towards buying down your rate to make it a little bit more comfortable on that aspect. There's all sorts of different things that you can do. So if you're looking to set that foundation right now, especially you're thinking about it, you're on the fence about your finances, you're on the fence about this and that, talk to a loan officer. It hurts nothing to talk to a loan officer. And if you are looking to set the foundation of your purchase coming up, feel free to give me a call. I've got great loan officers all around the Treasure Valley that can help you win in this market to be able to get the best deal possible, the best rate possible, even considering where things are at. All right, sellers. Well, sellers, it's kind of interesting time, especially in existing homes, right now, because you got more competition. I think that really what's happening here is that sellers just kind of came into grip with saying that this is just the way things are. Let's go ahead and let's make our lateral moves. We'll wait for things to change with the Fed, mortgage interest rates to come down, possibly refinance later on down the road. So you do have more competition that's arising. And what are we also seeing? We're also seeing the pending line starting to go the other direction. Okay, that very well could mean that buyers are tapering out. One thing to really consider, especially during an election cycle, is that buyers and sellers alike will start dipping out because there's just uncertainty until the election is said and done. This always happens every 4 years. So could we expect you possibly being in the position due to mortgage interest rates, the election, etc., and a lot of sellers kind of coming out of the woodworks right now, which is kind of unusual, but they are. Could we expect like your home to actually possibly devalue a bit more? It could. So stick around to this video. Again, like I said with the buyers, hit the subscribe button, hit the notification bell. Stay in tune with what is going on in these videos. Because if you are thinking about selling, it might be the time to get out there right now, and say like, hey, I want to get the most bang for my buck. I want to be able to get the most money possible and sell my house in the quickest amount of time possible for the buyer start maybe possibly disappearing again. So buyers, or for sellers, I understand that you're kind of in that predicament right now. If you have been on the fence about making that lateral move, this might be a great opportunity to do so before maybe some more home value does get dropped. Keep paying attention to these videos. But either way, there is more people coming out of the woodworks, more competition for you sellers. And that is the one thing to keep in mind as the best strategy. So you might have to make some adjustments, maybe offer some concessions, maybe come down a little bit in your price. Again, we're back on an even playing field between buyers and sellers. You had a bit of an advantage for the last 7-8 months. Now that's kind of taken back the other direction. So sellers, keep that in mind. And of course, we implement the best tools. If there's a tool out there for me to be able to go ahead and advertise your house, I know about it. And if I don't know about it for some reason, I'm going to go ahead and learn it. So I employ the best strategies to be able to get you the most money possible and sell your home in the quickest time possible in order to maximize the sale of your home. So if you are looking to know maybe where your home is priced, you are thinking about selling, you're thinking about the strategies on how I go about doing it for you, feel free to give me a call, shoot me a text, send me an email. Would love to set up an appointment with you to come on over and discuss this on how we can win for you. So sellers, I look forward to hearing from you. All right, investors, your turn. Very, very interesting times for you investors. Maybe we might see a break here where prices could be coming down a little bit. Again, click the subscribe button, hit the notification bell so that you're in tune with the next Mikey's Monthly Market Update that I come up with, showing what is going on in June. Are we going to see buyers' demand start tapering off and inventory continue to rise to where we can see some price decreases? We could, but I won't know yet, and I don't feel comfortable saying that yet. But again, we're kind of seeing it tick the other direction. So we'll just have to pay attention. But are mortgage interest rates still high if you are looking to get a loan for like a secondary property? Yes. And keep in mind that when you get a loan on a secondary property, your mortgage interest rate is going to be a little bit higher than if it was just your primary. You are going to spend some more money on that aspect. Of course, the more money that you can throw down is the best strategy to increase your capitalization rate overall. And if you are looking to know about your capitalization rate, feel free to give me a call. I'm more than happy to punch those numbers for you. But of course, cash is king. If you are looking to come out here, that gives you the best capitalization rate overall. But let's talk about vacancy rates real quick. Vacancy rates here in the Treasure Valley have been on the way up. So renters have been kind of ticking off overall. So that's something that you may want to consider, say something that you want to pay attention to, especially if you are an investor is, can I get an investor to come, or sorry, a renter to come in quickly, as opposed to have to wait for it? Because we know the lower the number of that turnaround is, the better. So keep your eye on that. I'll help you keep your eye too. Give me a call, shoot me a text, send me an email if you wish for me to do that for you, or just comment below. Happy to do that too. I can kind of keep you in that loop. If you are in the flip game, you are looking for properties to be able to, go ahead and, well, make a living and flip. So really kind of ground and pound is where it's at, knocking on doors and seeing who's willing to do what. But if they are putting it on market, you have a lot of competition out there to be able to get that property, to be able to flip it and make a profit. There is a lot of competition in the investor world when it comes to that area. So just want to kind of let you know that. But in investors, if you are looking for secondary properties, you're looking to invest in land. Land would be a great one right now, especially considering the uncertainty with what's going on in the U.S. There's actually a lot of investors out there that are investing in land. A lot of big people, a lot of one percenters out there that have a lot of money are really buying up a lot of the land here in the U.S. They're doing that for a reason. So it's something to really kind of think about. And it's something that even I'm thinking about being in my situation. But investors, if you are looking to do all this, you are looking to park your money somewhere to where you still got good growth rates, because again, as you can see by this data, we're growing here in the overall median home sold price in the Treasure Valley. Prices are still on the way up. It's a good investment. Right now in the markets, you'll probably be lucky to get about 3% return on the per year. Gold shot up, but you kind of missed that window, unless if nations continue to still buy, according to China, beans. Okay, there's some aspects to make money, but there's a lot of volatility going on in the stock market, especially. And is the S&P really in a bubble? In my honest opinion, I think that it kind of is. So is it still a great way to invest in, or to hedge inflation by investing in real estate? Yes. Is it here? Yes, it is. So please feel free to reach out to me. More than happy to go through these figures with you. Investors, I look forward to hearing from you. Till then. All right, and lastly, renters. As I say every single time, you are paying 100% interest rate because you are not making any of the equity. And as we can see here, the equity is on the way up. As I'm going to advise, like I normally do with every video, go back to the buyer strategies. Start thinking about these things, okay? And thinking about, do I have a stable enough job? Do I believe in what's happening, here in the U.S.? Do I think we're going to World War III? Do I think we're going to Civil War? I mean, there's a bunch of other different things to kind of figure. Also, feel free to call me about them. Let's discuss it out. But setting the foundation, again, costs you nothing. Costs you nothing. If you are actually thinking about making a home purchase and getting some of that equity for yourself that is still here in the Treasure Valley, talking to a loan officer is crucial. So I know great loan officers all over the Treasure Valley. Feel free to give me a call. More than happy to put you in touch with them. Again, costs you nothing. And if things make sense, let's start getting into it for you to get you that home purchase and go ahead and move forward so that you can have home ownership for yourself. So if you have any further questions about setting that, you're looking for that referral, feel free to give me a call, shoot me a text, send me an email. More than happy to start you in the right direction towards home ownership. Let's get you to win. All right, everybody. And again, as always, thank you for taking the time out of your day to watch these incredibly long videos. Stay tuned again for the big elephant that I'm going to be coming out with next week. It's a lot of detail to where, if you're thinking about buying, it might put you back on the fence. If you're thinking about selling, it could put you back on the fence. So hit that subscribe button below. Hit the notification bell so that you're constantly in tune with the videos that I do come up with, so that you're in the know before you decide to make the move. Also, if you are thinking about making a lateral move from out of state right here to the Treasure Valley, click in my description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, with any further questions, or you are looking to buy, sell, or invest right here in the Treasure Valley, feel free to give me a call, shoot me a text, send me an email. More than happy to answer any questions that you have and start this process here for you. And then, of course, feel free to share this information with anybody that you think that it's going to be useful for. And give me a thumbs up if you enjoyed this information. If you found it useful, it helps out the algorithm. It helps me out. Really, really be appreciative. But I look forward to that day we speak, everybody. I look forward to that day I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.